So I think it used to be like $1 million, now maybe it's $1.2 million per Bitcoin for gold parity. But I do think there is some feedback loop between gold and Bitcoin if it gets closer, because the people investing in Bitcoin ETFs are reallocate from something else. And, an obvious answer, if a broker asks you, well, what do you want to sell? Buy the digital gold. Is you say, well, sell the physical gold, right?
Yeah.
And the proportion of physical gold that is in ETFs is a much smaller proportion than the Bitcoin that's in Bitcoin ETFs. So I don't know if it's the case, but, for the price formation that is in the ETF markets, it's much closer to parity in terms of available market size.
Bitcoin's latest surge isn't just another price move. It's a window into a market quietly reshaping itself beneath the surface. Adam Back, a pioneering cryptographer and the inventor of Hashcash, offers an analytical perspective on Bitcoin's evolving market dynamics as the asset trades near $87,534 with a 3.37% daily gain. He emphasizes that the 4-year cycle remains a critical structural factor, though it no longer follows the predictable patterns of past bull markets. The halving continues to impose meaningful supply constraints, but its effect is often understated because an increasing share of Bitcoin is locked in long-term cold storage. With fewer liquid coins circulating, reductions in mine supply maintain significant influence, particularly as transformative technologies often accelerate rapidly once mass adoption begins, a stage Bitcoin has yet to reach. Back highlights that this cycle reflects a more complex mix of forces: steady ETF inflows, ongoing profit-taking, and emerging institutional participation that strengthens structural demand. ETFs have expanded access for affluent investors and wealth-managed clients, encouraging reallocations from assets like gold toward Bitcoin. Early-stage institutional accumulation provides steady, patient buying that reduces volatility and softens drawdowns compared with previous cycles. His remarks on unexpected OG selling add another dimension. Even as early adopters take profits, market conditions still resemble the early stages of a broader expansion. With fewer reactive participants and a larger base of committed holders, sell pressure continues to fade. As demand outpaces supply, the market is primed for renewed upward momentum and potential late-cycle FOMO, reinforcing Bitcoin's tendency to defy expectations. If insights like these help you navigate Bitcoin's evolving landscape, don't forget to drop a comment, share the article, and subscribe for more sharp market analysis.
We'll see. I'm thinking that you'll still have cycles, but it may not line up with previous cycles. And I mean, the reason you get cycles is the halving cycle. I think it's a real effect. People are often skeptical that it's a smaller percentage each time, but actually it's sort of followed by another effect, which is the hodl wave, i.e. people that learn the hard way, cold storing and dollar cost averaging of Bitcoin is a safer and more conservative approach than market timing and so on. And so over time, a bigger percentage of Bitcoin are long-term stored, saved, cold stored. And so the percentage drop in the halving, it should really be considered related to, as a proportion of the Bitcoin that are on the market. And these cold stored Bitcoin are not on the market. And so then effectively that ratio is not diminishing in the way that people think it is. And also most technology adoption curves go through a kind of mass adoption surge, and I don't think Bitcoin has seen that yet. So, could get the opposite diminishing returns, but this cycle could be an interesting one for that. There's a lot of people taking profit and new money coming in. People that are taking profit will eventually run out of coins that they want to sell, or the allocation that they want to sell, the allocation they want to hold on to. And there is a large amount of sustained buying from ETF buyers, from institutions. About 30% of the BlackRock ETF is apparently institutional. And, so that means most of the ETF buying is actually just a new, more accessible way to buy Bitcoin for probably mostly people in the bracket of the top 10% by wealth in the UK minus top 1%. People in the professional, like business owners, doctors, dentists, lawyers, people with a share portfolio, small business operators. And when they decide to buy Bitcoin, they just call their broker or financial advisor and they reallocate from something else. So it's not necessarily new money, it's reallocated money. And so I think the ETFs enabled that second wave, the first wave being people who bought on Bitcoin exchanges or OTC cash transactions. And the third wave being institutional. I think the institutional wave is actually very new. Like that's in effect, it takes a long time to ramp up, but nevertheless, the amount of Bitcoin buying is much higher than the Bitcoin being mined. So it's just a question of when the sellers run out of Bitcoin to sell or decide they don't want to sell anymore. And then presumably that will have an effect on the price. And then some of the people that sold might FOMO back in because, they may be thinking that looking at the history of halving, and if they see that invalidated, that will change their behavior as well. So there's a lot of market psychology in there. It's hard to predict. Bitcoin typically surprises people in some way or other. I'm a little surprised for the reason that anybody who's been through prior cycles wouldn't feel that this is a particularly high point. Like to a lot of people, that seems like this is relatively early in a cycle, sort of price-wise, in the distance from prior all-time highs and the distance from the prior all-time low, where the prior cycle's low and things like that, right? Should bear in mind, people forget quickly that in the last cycle, there was a third all-time high shortly before the halving, which would place you a few years out for this cycle, right? And I think also this cycle has seen smaller drawbacks. In previous cycles, you'd see maybe a dozen, 30, 35% drops. They haven't really seen that this time around. So the drawdowns are smaller, I think, because the ETF buyers, retail ETF buyers, institutional buyers, and the treasury company buyers are not panic sellers. They're long-term holders. And so they are actually buying the dips. And there's less proportion of the new incoming Bitcoin holders in this cycle that are prone to be shaken out by a drop. So it was a 2 cents. So it was Alistair Milne, who's a very early Bitcoiner. He has a tweet from 2011 saying something about Bitcoin and started a Bitcoin Alpha Fund in Monaco. So he had placed an order for 18.7 million Bitcoin, I think it was, which was all the Bitcoin that had been mined at that time at 1 cent. I thought, let's outbid him. So I put an order for 21 million just to be sure at 1 cent, at 2 cents rather, is $420,000. So it was actually a live order. But I think if in practice, it couldn't get filled because it was on the Bitfinex exchange and there are only so many Bitcoin on that exchange. So even if the Bitcoin price fell through the order, you could only possibly buy what was on the exchange. And of course, anything like that, everybody else comes out of the woodwork and places orders, so it never gets there. So you'd probably be more realistic to place a bid for a much smaller amount of Bitcoin at a much higher price, and then you might actually catch something in a flash crash.
From niche experiment to global financial benchmark, Bitcoin's journey reveals why it has become the ultimate test of innovation and adoption in modern markets. Adam Back reveals that in Bitcoin's early days, achieving mass adoption was uncertain. While Satoshi's 2009 release solved the technical challenge of decentralized electronic cash, the true test was whether the network could gain traction beyond a niche experiment. Lessons from earlier digital cash projects, like DigiCash, which failed due to centralization, shaped Bitcoin's decentralized design. Confidence in its viability grew gradually despite regulatory uncertainties and potential country-level bans, highlighting its resilience in complex legal and institutional environments. Back further reveals that Bitcoin has become a benchmark, or hurdle rate, for investors and companies. Its long-term performance surpasses traditional assets and indices like the S&P 500, prompting companies to allocate parts of their treasuries to Bitcoin while managing volatility with a mix of fiat and crypto holdings. Adoption now spans pension funds, sovereign wealth funds, corporations, and individual investors, reflecting Bitcoin's evolution from an early enthusiast tool to a foundational asset in the global financial ecosystem. Back also emphasizes that Bitcoin is an advanced monetary technology, blending digital and mathematical assurances with a tangible connection to the physical world. Unlike gold, it offers superior transparency and verifiability, reinforcing its role as a reliable, auditable store of value. Let's get back to the interview.
I think the sort of probability or the risk perception about Bitcoin reaching mass adoption there's much more uncertainty early on. So, people were hopeful and excited about the prospect of finally a deployed Bearer electronic cash that was decentralized. Like the previous ones were centralized, and that was ultimately the cause of their failure. And so that started the kind of hunt or the sort of applied research for a way to make decentralized Bearer electronic cash that ultimately Satoshi found the missing ingredient and made it happen. But I think at least for myself in August 2008, when I first heard about Bitcoin, and then when it was released in January 2009, the source code, my thought was, Satoshi has solved the technical challenge, but now comes the market test. Will it bootstrap? Will it get enough interest that it doesn't kind of remain a kind of techie, computer geek experiment that fizzles or never takes off, as opposed to gets a sustainable market, maybe volatile, but that will last test of time. So I think that took some years, obviously. So, hoped it would happen because, people like myself have been working on trying to make something like that happen for a long time. And there's a lot of excitement in a sort of Bitcoin-like vibe in the mid-90s with DigiCash, for example. But it failed. And the lesson people took from it failing was not, oh, it's over, let's give up, but what went wrong? How can we engineer a solution to fix it? And some of the ingredients that went into that were discussed and later used or rediscovered by Bitcoin. So I think the motivation was there, desire to see it, but the confidence about whether it's actually going to happen grew organically over time. And when Blockstream started in 2014, even then there was still a lot of uncertainty about the regulatory reception, whether major countries would ban Bitcoin and things like that, right? So actually Bitcoin has had a relatively smooth, undramatic growth and acceptance among users and even amongst establishment, tax authorities, regulators and so on, which has been interesting to see. Hedge funds, they have a concept of a hurdle rate, which is, if they have a fund which is trying to get a 20% return, they might charge typically a 2% management fee that comes off the top. And then they would say, and then you as the investor would say, well, wait a minute, I don't want to pay you 20% on the return for the first 5% because I can get that in something low risk like treasuries. So you haven't achieved anything by doing that. So they're like, okay, we'll take off that. So they then charge you the success rate above 5%. And that 5% is the hurdle rate. Another kind of hurdle rate or a benchmark is, what the S&P 500 or what a big stock index does, because, that generally represents economic progress. Now, I think Bitcoin is the hurdle rate because it's outperformed everything else. And so in any kind of long-term framework where you make an investment and you leave it there for a long duration, Bitcoin has outperformed anything else. And so I think, it's a neat thing to say to fund managers that Bitcoin's a hurdle rate, because it just says, well, if your fund has no chance of keeping up with Bitcoin, you should close it down and start a Bitcoin fund or tell your investors to buy Bitcoin. And I think that translates for companies because a lot of people have invested in startups that have obviously underperformed Bitcoin, even in the Bitcoin space, right? And so the obvious thing for a company to combat that effect is to buy Bitcoin with your own treasury, your own cash reserves. Of course, they have to deal with volatility, so maybe they keep a certain amount in fiat and the rest in Bitcoin for long term. And so I think ultimately every company becomes a Bitcoin company. Now, for the individual, who feels like Bitcoin was for the little guy, for the average person, I think that's true, but you got to expect that anything which is a successful new money is going to be adopted by all segments of the the financial ecosystem of the modern economy. So you see it in pension funds, you see it in sovereign wealth funds, you see it in governments, in states, in individuals, in retirement plans, in companies. Why not, right? I mean, companies are ultimately just a collection of humans, and a lot of modern societies' economic progress is actually derived from the invention of, limited companies and organized by shares and a capital formation to build new products. So, some people are kind of upset about companies or think that companies are the big evil in the picture, but really, companies are just groups of people organizing to do something. And, if they're successful, they can grow, they can become public, initially on a small cap stock market, and then they can use the capital markets to raise money to grow what they're doing. But they rediscovered Bitcoin because I think it's, it is a sort of very sort of fundamental basic thing that would eventually be rediscovered. And effectively, a lot of things that were mechanical and analog got improved by the digital world. Digital ignition on a car. Once you have a digital capability, you can just make a lot of things like, combination digital and analog variants or pure digital variants better than the original. And so Bitcoin is that. It's a better monetary technology because it involves digital assurances, mathematical assurances, and yet it's still as physically rooted in the physical space as gold. But, because of the digital phenomena, you can have much higher real-time assay assurances, and who the heck knows, how much gold is in Fort Knox, right? It's hard to tell, and they're not going to tell you. But with Bitcoin, you know how many Bitcoin there are.
Bitcoin's market dynamics continue to reflect a unique interplay between structural supply factors, evolving investor behavior, and long-term adoption trends. The halving mechanism maintains a tangible impact on circulating supply, particularly as an increasing portion of Bitcoin remains in cold storage, effectively limiting liquid availability. ETF-driven inflows and early-stage institutional accumulation have introduced a more patient, structural demand layer, softening volatility and absorbing dips more efficiently than previous cycles. Meanwhile, profit-taking by early adopters and selective OG selling interact with a growing base of committed holders, creating conditions where supply constraints and persistent demand amplify upward momentum. Over time, Bitcoin's role as a benchmark asset, outperforming traditional financial instruments, has encouraged broader participation across corporations, pension funds, sovereign wealth funds, and individual investors. Its technological design, combining digital, mathematical, and verifiable assurances with a physical world anchor, further reinforces its reliability as a store of value, while continued adoption signals that Bitcoin remains poised to shape financial strategies in ways that challenge conventional market expectations. How do you see Bitcoin's evolving role as a benchmark asset influencing corporate treasuries and long-term investment strategies? Stay ahead of the Bitcoin story. Comment below, and don't forget to subscribe for the latest market insights.